Good morning, everybody. Welcome back to the Opportunistic Trader. It's 10 a.m. and we're joined by Phil Flynn. Phil is from the Price Futures Group and Fox Business Contributor. How's it going this morning, Phil?
Doing good. I'm doing good. Crazy days all over the place. It's been rocking and rolling. How are you?
Yeah, I mean, look, it's all over the place. NASDAQ in just the past 30 minutes has rallied about 2%. From the Larry came on at about 8:30 to 9:15. NASDAQ dropped about 1.5%, and now in the past 30 minutes of trade, we've basically rallied 2%. So things are all over the place, and it's going to be one of those time periods, it seems like. I just want to give everybody an update. We just got October consumer confidence that came in at 137.9. They were expecting 135.9, so a bit better than expected. So we'll see. I don't think the market's really trading on any of that, but so what's going on, Phil? You speak to a lot of different traders. You speak to a lot of different people. What's going on with all the volatility recently? What do you think?
I think that there is a lot of fear in the marketplace. You wouldn't see it from the VIX necessarily, but I mean, there is a concern because the earnings have kind of missed expectations that somehow we flipped the switch and the economy's slowing. I think the mood when we saw the GDP last week, the drop in the business spending, of course, caught a lot of people's attention, and it raised concerns that maybe our best days are behind us, and the Trump rally and the Trump economy is going to start falling apart. Um, but I think a lot of people are reading too much into one month's data. I mean, there was a lot of positive things in that GDP as well. As far as growth goes. And then, of course, you've had some disappointing earnings, whether it be Amazon. Amazon's in a bear market, uh, allegedly, So you've had a lot of negativity all in a short period of time, and it's causing a lot of fluctuations. And we've had this big 10% correction, but it doesn't seem to follow through. And I think you made a really good point. I mean, according to Liz Clayman, who's my one of my favorites over at the Fox Business Network, she was pointing to stock market moves being the most volatile, up and down wise since the 1900s, since 1900. And so I had to go back and compare the economy to 1900 and where it is today, and to see what similarities we had. Of course, back in 1900, we were moving from an ag economy into an industrialized economy. You had a lot of stocks that were on fire for a long period of time, getting ready for the Industrial Revolution. You have these newfangled things, cars coming onto the marketplace or just right around the corner. So you had a lot of crazy volatility on expectations. But as I told Liz Clayman, it's like it looked really scary in 1900 when we saw that volatility. But I can tell you quite confidently now that it was a buy and hold, right? You should have stayed long the index. You'd be doing pretty good since 1900. So, but all kidding aside, the volatility has been a challenge for a lot of traders. Day traders are loving it because they get a lot of volatility, but the position traders, of course, are getting worried. Now, the question is, if you're a portfolio player, should you be buying or selling? There's a lot of debate out there right now, but we'll go back to my old buddy Warren Buffett, right? Buy when there's blood on the streets. And from what we've been reading, he's been buying some selective stocks. So I don't think Warren's ready to throw in the towel just yet.
Yeah, well, definitely selective stocks. We've been noting Apple has earnings on Thursday. That'll be really interesting because that's held in pretty well. I mean, yesterday got pretty sloppy in that period when the S&P traded down to through 20, I think like 2605. Apple traded below, I think like 2207. But for the most part, it's been trading firm, and that one comes out tomorrow, so that'll be interesting. Today we Facebook after the bell, but some of these names that have been really doing well all year, Apple, or actually, so Netflix, Amazon, Microsoft have come under pressure. Yesterday, that was really the leaders on the downside. Whereas some of the stock sectors that have not been doing as well, like financials on the year, traded pretty well yesterday, and financials are up over 1% today. Interesting rotation. What about oil? It seems like, in the past years, at times we've seen oil trade with S&P, kind of more risk tone, but oil's been trading heavy for the past few weeks, and today it's down 2%. What are your thoughts there?
You've seen record fund liquidation. Hedge funds basically that had a long position the entire way out of now going short, which has been a big part of it. And there's been this concern um, by a lot of these traders that somehow oil demand is going to fall off the map like next week. And it isn't about demand right now because demand right now is at a record high pretty much everywhere you look. Refinery demand for this time of year, gasoline demand, distillate demand, the averages, here globally, you see demand at a record high. Um, but now, of course, the hedge funds are basically looking at this market and saying, hey, we're going to have plenty of supply. We went from worrying about a supply shortage 3 weeks ago to people talking about a supply glut. So, what's the truth? Are we heading towards a supply shortage or are we going to head towards a glut in the next few months? And to be honest with you, I don't think the market knows. I mean, right now, um, the hedge funds are betting that that the worst is over, that we're going to be able to replace the Iranians' supplies with no problem. It's all hunky dory. Of course, 3 weeks ago was the other way. Everybody was like, "Oh my gosh, we're not going to have enough oil." We were hearing calls for $100 a barrel. The truth is probably somewhere in the middle. Interesting today, we had a big sell off and disconnect from the stock market. But I point you to today's low. I mean, we went almost perfectly on the crude oil, the December chart, to the 200-day moving average. And on the 200-day moving average, this is an area that you can go back for the last 2, 3, 4 years that anytime we got close to that moving average, it's been a buy. Um, and so the long term trend on this market, we really tested that this morning with the big sell off, and we kind of didn't quite touch it. We missed it by like 20 points, give or take a little bit, and the market turned around. So to me, that could be a sign that at least short term that the bottom could be in, that the correction could be over. If I was short, obviously from a higher level, that would be an area where you might want to take a little bit of profit. But it's still going to come down to, I think, the economy going forward and whether or not we're going to see a close below the 200-day average is probably going to depend on whether the stock market really bounces back or bounces back up a little bit. So the I mean, my belief is that when we got up to $77 3 weeks ago, we were too high. Now that we're almost at $65, I think we're too low. And the thing that you have to look at is that the refinery maintenance season is coming to an end. Tonight we get inventories. What we're hearing is that from the API report, the crude supplies are going to be up around 2 million barrels, pretty modest build. There's still a lot of concern about the difference of what the American Petroleum Institute is saying. And the EIA, some people think that the API has some more making up to do, that they might see a bigger build than the 2 million barrels, which could be potentially bearish short term. But the EIA report should be very bullish. But the thing I want to focus on is that report is the demand numbers. We cannot, continue to sell off oil if the demand continues to be strong, because one of the reasons we're selling off is that Saudi Arabia last week said, hey, everybody pump as much oil as they can, there's going to be plenty of supply, but we've yet to see that supply really start to show up. And the thing is that if indeed Saudi Arabia and all these other countries are going to raise production to the max capacity, we don't think it's adding that much more oil to the market. Maybe another 300,000 barrels a day, which is still going to be a far cry of what the S&P numbers really were. What we were losing on what we're losing from Iran. Excuse me. So what we're going to lose from Iran. So we still think there's going to be a supply deficit, and we still believe that the fundamentals are still very bullish as we go into the end of the year. And I keep talking about the heating oil, the distillate. the heavy crudes. Those supplies are still about 4% below average for this time of year. Demand's running 7% average. So even if we do get this projected slowdown in demand at some point, it better happen damn quickly, because I'll tell you what, people are going to be turning on their heaters in a month. People in China, it gets cold in China. The Chinese president is saying they're short of heating oil supplies. There's a tight market all over. And then people say, well, we got shale oil. The problem with the shale oil is it doesn't produce enough heavy distillate, and that's the Achilles heel of this market. The other thing, we had earnings from BP. They were spectacular. Big oil's starting to make big money. That's a good thing. They did talk about they're going to have extended refinery maintenance at the Whiting thing. So one of the spreads that was working really well was long heating oil, short RBOB gasoline. That spread could change a little bit. We're seeing that change a little bit. So it may have put a short-term bottom on gasoline as well. So, we'll see how today ferrets out. But as long as we, hold the low that we saw this morning, more than likely we'll see a recovery in prices here pretty shortly.
Yeah. Well, it's definitely been an interesting market there. We had that very the past 3 months, nice move higher, and then the past month has been moved lower. Back to the equity market, the big, a week from today, we have the U.S. elections, midterm elections. What is your sense on what's priced in at the moment?
I think if you look at the odds, and there's a high probability that the Republicans are going to retain control of the Senate, and there's a high probability that the Democrats are going to take the House. The polls really have been shifting, but we're coming out to the same thing. It's sort of like a football game between two teams. During the game, it looks like, oh my gosh, there's going to be an upset, but then at the end of the game, it comes out to pretty much as the way the line was to begin at the beginning of the game, that the other team falters and the other team beats the spread or makes the spread, and that's probably what's going to happen with the election. I think that if you look at a few weeks ago, the Republicans were definitely trending higher, given the Democrats run for their money. In the fallout from the Supreme Court nomination, it really hurt the Democrats' popularity, the Congress's popularity, the way that was handled, and it hurt them. But then, of course, there's been a few weeks since that. People kind of forget. There's a renewed concern, about domestic terrorism, the terrible attack on the Jewish synagogue, and that increased. There was a shooting at a Republican, office overnight. Somebody shot into, so the tensions are running very, very high, and it seems that. Some of the polls that we've seen is that President Trump's popularity, which was like in the high 50s or well above 50%, it's dropped back down below 50%. So that probably doesn't bode well for the House, for a House upset. And that's why we're probably just going to come out as expected.
Yeah, I tend to agree that that's kind of the expectation that I've been hearing as well, that probably Democrats take the House, Republicans retain. But the question is, I guess then, if Republicans were to take the House, do you think that would lead to equity? What do you think the market reaction would be? And vice versa, if Democrats were to take the Senate, what do you think?
I would say, because it's a surprise, we would get a pretty big rally. We saw that the market loves Donald Trump's overall, policies, even with the trade war causing some doubts. It'll probably be very bullish for the market, because there's an expectation that if the Republicans get into the House, not only will we have the corporate tax cut, but then they'll start working on a middle class tax cut, and that should be very bullish for the stock market. On the other hand, I don't necessarily think, if we get the what's expected, that the House turns Democrat and the Senate turns Republican, that will necessarily be too bearish for stocks either, because deep down inside, the stock market does like a little bit of a little bit of a gridlock, which is, maybe something that could set in a little bit. And so if you're worried about the deficit, you're worried about those things, maybe the middle class tax cut will be put on hold. And then, of course, we'll have more drama. Um, I do think that the market will not take kindly to a Democratic sweep if that happens, because I think that would be viewed as higher taxes, slower growth, at a time where we're already starting to see slower growth fears set in. We're already seeing the Fed raise interest rates. We're already seeing, the concerns that the trade war is going to slow growth. The last thing you'd want at this point is to start raising taxes and trying to push that through. So that would be a problem, I think, down the road as well. So I think that would be very bearish.
Yeah, yeah. Well, it'll be interesting. I think that'll also come more into focus over the coming days. So the market's got so much on its plate right now that talking about all different topics, and but that's obviously in focus now as we're 1 week away, and so what happens there. All
Mm-hmm.
right,
All
Phil.
right.
Thanks for joining us with all
You
this
got it, kiddo.
volatility. Some great
You got it.
information.
Buckle
Appreciate
up,
it.
guys. Keep your hands and feet in the tram at all times. That's what you got to do on a day like today.
Yeah, no, it's all over the place, and definitely. So, all right, thanks a lot, Phil Flynn,
Thanks, sir.
Price Futures Group.
Bye-bye.
I'll talk to you later.
Thanks.